options trading can be a profitable way to invest. In this video, I'm going to give you an overview of what options are and how they work, as well as some basic strategies that you can use to make money on the stock market. Welcome again. This is your Minister of Capitalism, Brett Davison. The stock market is one of the most volatile markets out there to try and trade. With all the ups and downs, it can be hard to know where you should put your cash in order to get a return on investment. But luckily, options trading has been around for decades now, and here's what it's all about. Options are powerful tools that not only give investors a sense of control, but also the potential for enormous profits. They can be tricky to use, which is why many people avoid them or have bad initial experiences with options. However, it's never too late to get started and learn how these financial instruments work. Options offer an extremely diverse range of benefits over traditional investments, including giving traders more power in their decisions, as well as opening them up to higher risk and higher reward opportunities. Many newbies make mistakes when trading because they don't understand the risks involved. I'm going to help explain all there is about option fundamentals, so if you are a beginner, you will not fall into those traps again. A lot of traders on TV use words like risky or dangerous when they talk about trading options. Despite what some might say, it's important for investors of all levels and backgrounds to get both sides of the story before making a decision about whether options trading is for them or not. Options are not always risky. In fact, it can be quite beneficial if you know how to use them correctly. Options are a fantastic trading tool, and with so many advantages, it's no wonder that those who have been using them for years can't understand why more people don't want to use them too. Let's look at the four main benefits of options: increased cost efficiency, less risk than equity investing in general, higher percentage returns if done properly, and finally, there is always an alternative strategy if something doesn't work out according to your plan. Number one, cost efficiency. People who invest in options are able to get a position similar to that of a stock with much less cost. For example, an investor can purchase 200 shares of stocks at $80. So they would end up paying $16,000 for all of the shares. But if they were to buy call options, they could place the same trade for much less. Let's say they bought 2 calls at $20 per contract. Now, because each contract controls 100 shares of stock, the total cost would be $4,000 to place the trade. The use of stock replacement as a strategy is both practical and cost efficient. This technique, which involves buying call options to mimic the position of owning stocks, has been shown to be not only viable, but also successful for investors who have done their research and made good trade calls. Let's look at a quick example. Maybe you want to buy some stock in ABC company because you think the price of their stock will increase within the next month. For now, let's assume the stock of ABC costs $50 per share. If you wanted to buy 100 shares, this would cost you $5,000. But if you thought the stock would go up in a month or two, you could buy call options on ABC stock instead. You could buy calls that expire 2 months from the date you placed the trade. Let's say you were able to buy at the $50 strike for a cost of $15 per contract. Placing the call option trade for one contract of ABC would only cost you $1,500. $15 multiplied by 100 shares per contract. So you could essentially control the same amount of shares, but with a much smaller outlay in trading capital. Number two, there is less risk involved in trading options if done properly. Buying options can be riskier than owning stocks in certain situations, but they also offer a way for investors to lower their risk. The degree of risk associated with buying an option is dependent on the type and timing of the trade that you make. Options are less risky because they require less money commitment than equities, and often are not affected as much if a stock gaps up or down. Options are often a much safer way to hedge a trade when compared to trying to do the same with stocks. This is because they protect the investor from losses below a predetermined price. They also have another advantage over stock stop-loss orders. They protect you no matter what happens. While stop losses are fine, if the market drops suddenly, your stop-loss order might not get filled. So even though you set up a stop-loss order, it could get ignored. But this never happens when you place a protected put trade, as you will make more money the further the stock drops. Let's look at a quick example. Maybe this time, you want to buy XYZ stock at $45. But you don't want to lose more than 10% of your money on this trade. So you put in a stop loss order. That means Once the shares of XYZ stock drop below $45, your order becomes a sell order. But let's say that one evening there is a news story about XYZ. Apparently, the chief financial officer did not know what she was doing. It turns out she was only hired because she was the wife of the CEO. And she does not know anything about accounting, so the financial records are a mess. Because of this, the stock price plummets down to $9 overnight. This means when the market opens the next day, your stop loss trade will be executed at $9. You may not have lost all of your money if you had purchased a put option to protect yourself. Unlike stop loss orders, options will stay on the market 24/7 and never close while the stock exchange is open. They provide insurance for investors who can't afford to take risks with their investments. This is something that stop orders cannot do, which makes it worth considering in volatile markets. Number 3, trading options has higher potential returns. You don't need to be a math whiz to see that if you spend less money and make almost the same profit, your return will skyrocket. When they pay off, these are typically what options offer investors higher percentage returns. It's the same principle that we went over when we explained how purchasing calls and puts works. Number 4, there are more strategic alternatives. Options are a unique investment tool that make it possible to be involved in many different markets. A synthetic position is when you use multiple option positions, resulting in a more complex trade like an option spread or strangle. These sorts of positions can offer larger profit potential. Options have their own set of advantages, but one major perk they offer over other investments is flexibility when compared to other strategies. Synthetic positions are like strategic investments on steroids. They present investors with multiple ways to attain the same investment goals, which can be very useful and advantageous when used correctly. For example, many people use brokers who charge for shorting stocks. But option traders can get around this if they buy puts or use other types of synthetic trades. The cost effectiveness and versatility make these alternatives appealing because they offer more control over your portfolio without having to spend tons of time researching all the different strategies available. The inability to play the downside when needed really restricts traders. But no broker can stop a trader from using options to play the downside, which is great for those who want more control over their investments without all of the hassle. Trading options also allows the investor to trade not only with market direction, but with volatility as well. Time is a factor in this game too, because it doesn't just matter what stocks do now, but how they react over time. And taking this into consideration can have a huge impact on a trader's success. My final thoughts. If you have not discovered the power of options as an investment tool, now is your chance. Options provide investors a way to obtain high returns with less risk than trying to trade stocks themselves. And with the costs associated with trading options falling dramatically, it is opening up even more opportunities for individual traders. Once again, this is your Minister of Capitalism, Brett Davison. And if you felt a spark while listening to this, it means we're meant to be together. So head on over to theempiricalcollective.com and sign up for membership, if there is still room,